Most people believe that the Federal Reserve prints the money you use every day. They imagine a giant machine in the basement of a DC skyscraper, humming with activity, churning out $100 bills by the billion. It is a comforting image because it implies that someone is in control. But it is entirely, fundamentally wrong. The truth is far more uncomfortable. The money you use is not printed by the government. It is conjured on demand by private bank balance sheets. This is unseen hand, revealing the hidden forces that shaped money, empires, and your future. When you look at your bank balance, you see a number. You believe it represents a deposit, a finite resource that someone else has saved, sitting in a vault waiting for you to spend it. But what if I told you that the number representing your life savings only exists because a banker, somewhere, decided to create a matching debt? Money is not a commodity that is stored. Money is an IOU that is balanced. And the system that balances those IOUs is the most complex, fragile, and misunderstood machine on the planet. To understand the global money factory, we have to look past the Federal Reserve's printing press myth. The Bank of England, in a landmark report, finally admitted what institutional finance has known for decades. Banks do not lend out deposits. Banks create deposits. Think of it like this. When you pull out a mortgage, the commercial bank isn't taking a pile of cash from another customer. They are literally expanding their own balance sheet. Every time a loan is issued, a new dollar enters into existence. And every time a loan is paid back, a dollar is erased back into the digital void. This means the money supply is an elastic, breathing thing, tied entirely to whether bankers are feeling optimistic or fearful. But this is only the local level. The truly invisible part of the global money factory is the Eurodollar market. Eurodollar does not mean money in Europe. It means any dollar sitting in a bank account outside the direct jurisdiction of the United States. If a Japanese firm holds dollars in a bank in Singapore, that is a Eurodollar. If a Brazilian oil company holds dollars in a bank in London, those are Eurodollars. These dollars are completely untethered from the Federal Reserve. They operate in a regulatory shadow world. They are the backbone of global trade, yet they exist in a jurisdictional void where the Fed has absolutely no ability to print, manage, or control them. It is the largest offshore pool of liquidity in human history. It is a $60 trillion ghost machine that runs on trust between private banks, entirely outside the visibility of DC. So, how does this sprawling, invisible network actually function? How do these ghosts get to where they need to go? The answer is Repo. If Eurodollars are the fuel, the repo market is the coolant system. Repo stands for repurchase agreement. It is a bank saying to another bank, I will give you cash for 24 hours, but you must give me a rock-solid piece of collateral, like a U.S. Treasury bond, to hold until you buy it back tomorrow. It is the plumbing of the global financial system. When the Fed raises rates, they are just trying to influence the flow. But when the repo market clogs, as it did in 2008 or in the famous repo spike of 2019, it's like the coolant suddenly stopping in a nuclear reactor. Collateral disappears, trust evaporates, and the entire global engine reaches a point of flash freeze. The plumbing must flow, or the economy stops immediately. Think about the modern crisis cycles. People look for a villain. They look for a shady cabal in a boardroom. But go back and look at 2008. It wasn't just greed. It was a technical collapse of the collateral chain. Repo desks stopped trusting mortgage-backed securities as collateral. The engine froze. In 2019, the repo market spiked, and the Fed had to flood the system with liquidity just to keep the plumbing from bursting. This isn't a conspiracy. It is an automated, systemic, algorithmic necessity. We have built an economy that requires an infinite, frictionless collateral chain to operate. When the chain breaks, we find out just how fragile the digital dollar really is. The question is not who is in charge of this global machine. The question is, what happens when the logic of the machine conflicts with the reality of the people living inside it? We have outsourced our monetary foundation to private balance sheets and offshore conduits. We have traded security for the massive, elastic efficiency of the global liquidity factory. But an engine that requires constant, endless growth and perfect trust to keep its plumbing flowing is an engine that cannot handle a panic. The unseen hand isn't a person. It is the ledger itself. If this gave you a new perspective, hit subscribe. History has the answers. We show you where to look.